Buckle up, because the latest market downturn is sending shockwaves through Wall Street and beyond. The economic landscape has shifted dramatically, wiping out a staggering $1.7 trillion in market value. Some of the biggest casualties include tech giants like Tesla, Apple, and Nvidia. Investors are scrambling as recession fears mount and trade tensions with major global partners escalate. Is this just a rough patch, or are we headed toward a full-blown economic crisis? Let's break down what's happening and why it matters. The U.S. stock market took a massive hit after new trade policies introduced sweeping tariffs on imports from key global partners. The goal was to revive American manufacturing and reduce the trade deficit. However, the result was market uncertainty and a sharp decline in investor confidence. Within the first week, the Dow plunged nearly 900 points, while the S&P 500 and Nasdaq dropped 2.7% and 4% respectively. Tesla felt the brunt of the storm, losing a brutal 15% of its market value, over $125 billion, in a single day. Other major tech stocks, including Apple, Microsoft, and Nvidia, also suffered losses ranging from 2% to 5%. Market analysts highlighted that the uncertainty surrounding trade policies was fueling chaos. The S&P 500 has sunk nearly 9% below its all-time high, and the Nasdaq 100 suffered its steepest single-day loss since September 2022. Investors are now scrambling to rebalance their portfolios and brace for what's next. Tesla and the tech sector get crushed. Tech stocks have taken the hardest hit in this market downturn, and Tesla is at the center of the storm. Since recent policy changes, Tesla's market value has plunged by a staggering $565 billion. With significant stock holdings, Tesla's leadership has personally faced substantial losses. Amazon and Nvidia also took major hits. Amazon's market cap tumbled by $277.9 billion, while Nvidia's value shrank by nearly 12%, wiping out $403 billion overall. The tech sector of the S&P 500 fell 4.3%, marking its worst performance in over a year. Analysts attribute the sell-off to a combination of new tariff strategies, tech sector volatility, and overall economic uncertainty. One expert called it a perfect storm of market conditions. Companies like Apple, Microsoft, and Alphabet also posted sharp losses, further shaking investor confidence. The tech sector has been driving market gains for years, but now it's facing significant challenges. However, this is not just a tech issue. The broader economy is feeling the pressure as well. Before we venture further, we'd appreciate it if you could hit that like and subscribe button. This helps us connect with more auto aficionados just like you. Now let's change lanes and navigate toward our next point. The market turmoil is directly tied to growing trade tensions between major global economies. New tariffs have led to swift responses from international trade partners, including retaliatory tariffs on American exports. Key industries, from agriculture to energy, have been impacted by these changes. The financial sector has also felt the effects, with the bond market flashing warning signs. The yield on the 10-year Treasury bond slid to 4.2%, reflecting growing fears of an economic slowdown. Meanwhile, global markets mirrored Wall Street's struggles, with Japan's Nikkei 225, Taiwan's TAIEX, and Hong Kong's Hang Seng Index all suffering losses. Leading financial institutions have adjusted their recession forecasts, increasing the odds of an economic downturn in the coming months. Investors are closely watching developments, as the market's next moves could determine whether this downturn is temporary or the start of something much worse. What's next for the market and the economy? Investors are keeping a close eye on several key indicators that could shape the market's future. The upcoming inflation report and the Federal Reserve's next move on interest rates will be critical factors. Any misstep could send markets further into decline. Corporate earnings are also under pressure. Some companies have already slashed profit forecasts due to worsening economic conditions and trade tensions. If more companies follow suit, the market downturn could accelerate quickly. Economic strategists are now advising caution to prevent further instability. Some analysts believe there are reasons to be optimistic, but data suggests there may still be trouble ahead. Market uncertainty remains one of the biggest threats, and for now, that uncertainty continues to dominate investor sentiment. Verdict: a fragile recovery or more pain ahead. The U.S. stock market is facing a critical moment. Recent trade policies have erased $1.7 trillion in market value, leaving investors rattled and the tech sector struggling. Tesla's historic drop reflects just how vulnerable the market is to trade-related shocks. With recession fears mounting and financial institutions under pressure to act, the market's future remains uncertain. So what do you think will happen next? Will trade policies stabilize, or is the market heading toward a deeper downturn? Let us know your thoughts in the comments below. We want to hear from you. If you enjoyed this breakdown, make sure to subscribe to Piston Pundit and turn on notifications so you don't miss the latest updates on the market and the auto industry. Thanks for tuning in, and we'll see you in the next